This is In the Money with Angela Miles.
We're ahead of the Fed and behind Apple's earnings. Hello everybody, I'm Angela Miles. Thanks so much for clicking on. Here's a quick look at what's going on with the Apple trade today. As I mentioned on my show a couple of times, that 600 strike, the call strike in the weeklies, was extremely active going into the earnings. Well, now that those blowout numbers are out and the stock is rallying hard, right now those people are very happy. In the weeklies right now, that what we're seeing are the 600, 610, and 620 call strikes very active. It looks like those are more call sellers, as now the news is out. The volatility is coming down. For April, it's right around a 44. For May, it's a 33. So there are some traders who are still taking advantage of that volatility situation and playing the weekly options against the traditional options. By the way, in May right now, there are some call buyers going especially for the 650 call strike. I thought that was interesting. On the put side, there are some 575 put buyers. On the tape so far, 70,000 options contracts have already traded right here at CBOE. That's a big number. Usually there's only about 25,000, 30,000 by now. So they're continuing to pump up the volume on Apple options. Moving on to Amazon, which comes out with earnings tomorrow. Right now the stock is trading right around 194. The 195 and 200 calls are active in the weeklies, which expire on Friday. There are more calls than puts trading, but as far as those put buyers, they're willing to pay a high price for those puts. For example, right now the 185 puts are going for around 12 cents. People willing to pay $2.80, even though theoretically, again, those contracts are worth about 12 cents there. The straddle on Amazon for 195 is pricing in at $12.30, an indication that traders are waiting for or hoping for about a 5% move on Amazon. I love watching what's going on with some of these internet IPOs. Zynga happens to have earnings coming out this week. Right now the stock is trading right around $8.80, close to its IPO price. Got up to what, around $15. It just IPO'd last year. Right now the May 9 and 10 calls are active on Zynga. On the put side, they want the 7 and the 8 puts for May. The implied volatility spiking up. It's right around 114. Quick check back on Boeing, which is soaring today. It's up $3, trading at $76 off of positive earnings news. Right now the May 75 and 77 calls are active. In June, they want the 82 calls. Going out to August, the 85s are active, an indication that traders are looking for this stock to continue to climb. Caterpillar down about 3%, trades at 105. The May 105, 110, and 115 call contracts are active, an indication that even though the company beat expectations, had some revenue issues, some people are thinking that perhaps the stock will see a bounce back. Trader Andrew Keene bounces onto the show coming up next. Don't go anywhere. I'll be right back. Andrew Keene, president of KeeneOnTheMarket.com, is here now to talk about his trades in Apple, and I understand you had trades in the weeklies as well as the traditional options. How'd that work out for you?
It worked out very, very well. As most people know, today is actually a Candy Apple Red Day. We're both wearing red for the Apple.
We are.
So this is the first time going in an earnings call that I was actually kind of nervous. The iPhone number and the iPad number has been, drifted to the lower side of the 30 million and 12 million. And when Apple put out that 35 million print on the iPhone, stock took off. Closed last night around 603, so a little bit more momentum to the upside. In the weeklies, since I was nervous, my position wasn't as aggressive as I've been in the past, but I put on a great risk versus reward trade. I bought the 575 and the 635 calls, sold twice as many of the 605 calls. So this is called the call fly. I did this for $5. Today it's worth about $18. The closer that Apple closes to the 605 level on Friday, the more it'll be worth. The most it can be worth is $30. I put it on for $5, so it's working out very well.
And have you put any more trades on?
No, I haven't. I also have a May call fly on. I'm long the 600s and the 660s. I'm short twice as many as the 630s. So both of them are bullish. I need Apple, to stay above the $600 level. 68% of the time, Apple sells off from the opening print today, the day after earnings, to the closing print. It opened up at I think 616 or 615.56. So that's going to be a key level for today. The at the money straddle, which is very interesting to me, was about $41 on Monday.
Exactly.
Then it went to 37, and yesterday actually closed 34. So Apple made a bigger move than most people anticipated. The at the money straddle worked out. I was actually long that as well. I took it off a little too early. I sold stock last night, but Apple, I continue continue to say that, you know, Apple is a buy. I buy Apple on every dip. I get long Apple on every dip. I'm also short put spreads in January 2013, which I'm contemplating if I want to take off or leave on. There's the 450, 400 put spread. I've had that one on forever, but it still has some value because Apple does move a lot. Apple blew out their number. Great iPhone, great iPad numbers. You know, the PE in my point of view is so cheap that I have to get long on any dip, and I'm always long or flat Apple.
All right, let's talk about your quick play on Netflix too.
Yeah, I had a great trade on Netflix that worked out as well. I announced these all in my live trading room. I was long the Netflix weekly 95, 85, 75 put fly, so very, very similar to Apple. I did this for $1.75. Today it's worth about $6.50. Netflix is right around this 85 level, so even though they're weeklies, and I always say that there's no trade is a winner till it's closed, this will be worth $10 if the stock closes at 85, which it's trading at right now. I still have my full position on, so I just want Netflix not to move for the next couple days, and this was a very similar trade. You know, like, I like to trade earnings, I like to trade weeklies, and I like to trade risk versus reward. So I risked $1.75, and Netflix ran to 130. That's fine. You know, I can only lose what I pay for an option. So this is why I like to play these call flies and put flies.
Thanks for being on the show today, giving us a breakdown on your trade. That's a wrap for me. I'm Angela Miles, and don't forget, coming up tomorrow, I have my weeklies report. Stay tuned for that.